Today I'm updating you all on my $100 Robinhood portfolio. I'll be talking about how the 5 stocks I've invested in, how they've done, and what I can see for their future performance. So welcome back, channel. If you're new here, hit that subscribe button. I'm Ken Kerner from 80/20 Investing, and on today's video, let's try and get 20 likes, 20 comments, help me get towards 1,000 subscribers, and as always, comment what you thought of today's video and what you want me to talk about in future videos. So this is a series where about a month ago I put $100 into the stock market, invested in 5 stocks, and that's my $100 portfolio. I've invested in 5 stocks, and so to look at the overall performance of the portfolio, I think it's done similar to the market. At its peak, after I invested $100, it was $102, and then recently it's taken quite a dip and it's decreased overall about 3%. Nothing is to be worried about. And remember, the stock market can do anything in the short run, so it's not anything to be worried about. And in the long run, as long as you're sticking to long-term investing, value investing, you'll be fine. So the first stock I invested in was AMD. So I purchased each of these shares at I purchased one whole share at $14.68, and at one point, if we look at AMD, it was around $17. So that would have been a return of about 15%. But for this year, AMD is up 62%, which is huge. Overall, I like AMD's revenue growth. I like their profitability. I think it was very overhyped right about here, and that right now it's cooling down, stabling, and then people are deciding, okay, do they want to remain bullish or bearish on AMD? If we look at Seeking Alpha, people are so split on this topic. But I mean, I just really encourage you all to do your own research. And if you're confident in how revenue is growing, if you're staying updated with their news and think everything's looking good, then stay invested. Continue to invest in undervalued companies. So I still really like AMD. I believe it's overall the best performer in my Robinhood portfolio for this $100 account right now. So nothing special, but so a total return of 4% in about a month, which is fine. So that was my first stock, AMD. To get into my second stock and how it's done is AT&T. I still love AT&T. I think if you like dividends, you should absolutely love AT&T. And this stock, AT&T. So check out its performance in the past month. It's taken a little bit of a dip recently. I'm down 3% on this stock compared to AMD, where I'm up 3%. But I still like a lot about AT&T. I see them going up in the short term, and then over the long term, very slow progress. But interesting, they're raising their prices on a lot of services right now, and I think that's going to bring a lot more revenue. And because AT&T is a low variable cost business, high fixed cost business, each dollar increase in service or total revenue is going to be huge and very, very profitable for AT&T. And their ex-dividend date is coming up soon, so a lot more people are going to be wanting to get into the stock. So I see definitely short-term and a little bit of long-term appreciation with AT&T. So nothing to worry about there. Still love that company. So that was my second stock. First stock was AMD. Second stock was AT&T. And so let's get into Bank of America and what the heck is going on with them. Banking stocks recently have been experiencing quite a lot of volatility, and Bank of America has absolutely been in that boat. This page is about to load through in a sec. I guess we can go to some news first. So people are seriously worried about bank stocks within this near future. Interest rates being hiked, and that's concerning for the whole market, let alone bank stocks. And yeah, people aren't really fans of bank stocks. I still think Bank of America especially has a great balance sheet. They've been improving revenues and profits, and it is currently one of my favorite banking stocks. If I wasn't limited to a $100 portfolio, I would look into other stocks. But I mean, in the past month, I purchased this stock at $30, and so it's taken about a 7% decrease. So that's been hit really hard. But I still like Bank of America. Because I am confident in companies with improving revenues, improving incomes, improving balance sheets. I'm fine with all of these investments because I've done my research, and I encourage you to literally just learn basic fundamental and technical analysis and stick to it. Don't worry what happens in the short term with these stocks. So that was my first 3 stocks, and then let's talk about my speculative stock, Helios and Matheson Technologies, or Analytics, sorry. And these guys are down a whopping 40%. So, this stock is something for me to have a lot of fun with. I think that this stock had the potential to triple. It still does, I think. But there's news coming out right now that they're looking to issue a lot more debt. They need to raise a lot more money. I mean, that's obvious. They're lighting cash on fire. It's a brutal cash flow situation, let alone a profitability situation. and yeah, the stock's just continuing to plummet. But you know, this stock is ridiculously volatile. They're talking about a 250 to 1 reverse stock split, and that could do anything to the price. I still think these guys are burning through cash so quick that you'll continue to see a decline. But yeah, I got in at 38 cents, and now it's at a whopping 23 cents ish. Overall, you know, I'm having fun with this portfolio. I would have never invested any remote amount of money into them in real life, but it's pretty funny, and you know, I still think there's potential for these guys to recover. If a great piece of news comes out, you can see the stock probably jump 100% in a day. But if there's not that miracle piece of news, it'll horrible downtrend for Helios and Matheson overall. So that's 4 out of 4 stocks so far. So far, AT&T is the only one that's really appreciated significantly, and then we can look at Callaway. I mean, golf stocks overall have been on such a tear this year. It's really cool to see how, you know, how they're delivering, how they're improving year over year. And I purchased this stock at 1961, and at one point it was well above $20. Let's see. Yeah, so it was nearly $21, so that would have been what, more than almost a 10% increase in the stock. Yeah, so 8%, 7%. I still like Callaway a lot. They're improving revenue, improving profitability. Then 2 quarters from now, they're going to have a horrible quarter because this is a very seasonal stock, which makes sense. Make sure you're aware of that before you're investing in stocks. But yeah, so overall, 4 out of 5 stocks are down since I started investing. But then again, the S&P is, I think, at 0% in this past month. So make sure you evaluate how the market's doing compared to your portfolio so you're not going crazy. Stay in tune, and yeah, I'll continue to update you guys on this portfolio. I'm thinking about starting some new portfolios. Let me know what stocks you want to see in those portfolios. And if you have any questions at all, if you want to criticize me, if you want to tell me how good I am, please do so in the comments section below. Thank you so much for watching this video, and yeah, I'll see you on the video tomorrow.